Imagine waking up, grabbing your phone, and checking your banking app, only to find a strange new notification waiting for you. Your money now has an expiration date. A flashing red banner says, "Spend your remaining $500 on groceries by Friday." Or it simply disappears. Sounds like the plot of a dystopian science fiction movie, right? Well, unfortunately, it is not. Welcome to Unfiltered Finance. Today, we are taking a cold, hard look at the new financial architecture currently being built. It is being engineered right now, behind closed doors, by some of the world's most powerful and opaque financial institutions. We are talking about central bank digital currencies, widely known as CBDCs, but with a deeply concerning new catch. These digital currencies are being inextricably linked to unified digital IDs. Without the ID, your digital wallet is completely useless. This isn't just a simple technological upgrade or a story about losing physical cash to convenient digital payments. This is a highly synchronized global effort that will fundamentally alter how human beings interact with the concept of value. It threatens to obliterate traditional commercial banking, wiping out the local branches and retail banks you have known your whole life. Furthermore, it is poised to ignite a brutal geopolitical war for the ultimate control over the future of money itself. The superpowers of the world are currently racing to deploy these programmable networks before their adversaries can establish dominance. Because whoever controls the central ledger and the digital identity grid will hold the power to freeze out entirely rival nations. They will also hold the power to dictate the daily spending habits of billions of ordinary citizens with terrifying precision. The financial cage is being assembled piece by piece. Let's dissect the reality of programmable money, step by step. Let's begin by stripping away the complex marketing jargon and clarifying one massive misconception right out of the gate. A central bank digital currency is not Bitcoin. Cryptocurrencies, at their core, were originally built on decentralized, permissionless blockchains. The entire philosophical foundation of crypto was to bypass centralized governments and financial middlemen to create a free market. A CBDC is the exact opposite. It is a highly centralized, programmable liability belonging entirely to the central bank. It operates on a private, closed ledger where the issuing government authority has total visibility and ultimate dictatorial power. And this is not just some fringe theoretical experiment. According to a comprehensive 2023 survey by the Bank for International Settlements, a staggering 93% of the world's central banks are currently developing, or already testing, their own digital currency. Why the sudden, synchronized global rush? Because traditional physical money has a fatal flaw for those in power: total anonymity. When you hand a physical $100 bill to a local merchant for groceries, the central bank has absolutely no idea. It remains a completely private, peer-to-peer transaction. But programmable currency fundamentally changes the underlying physics of how money operates. Augustin Carstens, the general manager of the BIS, publicly stated the quiet part out loud during a major economic forum. He boldly noted that with a CBDC, the central bank will have, quote, absolute control on the rules and regulations that will determine the use of that expression of central bank liability. He meant exactly what he said. Read that quote again. Absolute control over the specific rules that determine how, when, and where you use your money. But to truly exercise that level of absolute surveillance and control, they need one final, critical piece of the puzzle. That final piece of the puzzle is the digital ID. It is not merely a digital version of your driver's license or passport. It is a unified, biometric, government-verified credential. It consolidates your financial history, social data, and biological markers into one centralized database. Governments around the world are aggressively pushing this infrastructure, marketing it heavily under the guise of ultimate convenience and security. But the true purpose becomes terrifyingly clear when the digital ID is inextricably linked directly to your sovereign CBDC wallet. These two distinct technologies are being designed to operate as a single organism. The programmable money acts as the muscles, while the digital ID serves as the all-seeing brain, meticulously verifying every single movement of capital in real time. Without a valid, fully compliant digital ID, your central bank digital currency is effectively paralyzed. You simply cannot transact. Together, they form what we can only describe as the ultimate control matrix, a closed-loop system with absolutely no escape hatch. Once this control matrix is fully operational, the systemic shockwaves will immediately strike the very foundation of our current economy. Let's look at the first, and perhaps most massive, casualty of this new centralized system: your local, traditional commercial bank. For centuries, the global capitalist economy has relied on a model called fractional reserve banking, driven primarily by private retail banks. In this legacy system, banks act as the essential intermediaries. You deposit your hard-earned savings into an account, and the commercial bank turns around and lends that exact money out to local businesses, home buyers, and entrepreneurs. They only keep a very small fraction of the total deposits in actual reserve, hence the term fractional reserve. This credit creation engine is the lifeblood of capitalism, but the introduction of a retail CBDC changes everything overnight. When the Federal Reserve or the European Central Bank offers you a direct digital wallet, the entire financial dynamic changes. Think about it rationally. In a financial crisis, would you rather keep your hard-earned savings in a commercial bank, a private institution that can, and historically does, go bankrupt when global markets crash? Or would you rather park your wealth directly with the central bank, the ultimate authority that literally prints the money? The answer for most rational actors is incredibly obvious, and this perfectly logical choice triggers a catastrophic event. It is known in financial circles as a digital bank run, and it happens at the staggering speed of a smartphone swipe. As massive waves of deposits instantly flee the commercial banks and migrate directly into central bank CBDC wallets, the local retail banks are completely drained of the core capital they absolutely need to survive. The International Monetary Fund has already openly acknowledged this severe disintermediation risk in their internal policy reports. If commercial deposits evaporate, their ability to issue mortgages, fund small businesses, and provide credit cards completely collapses. The entire decentralized credit creation engine of the free market capitalist economy simply freezes. This leaves a massive void. Central banks will then be forced to step in as the sole allocators of credit. They will decide which industries receive funding and which businesses are starved of capital, entirely based on political agendas. This effectively shifts the dynamic, free market economy into a rigidly controlled, centrally planned financial command economy. But the death of the commercial bank is just domestic collateral damage. The real war is happening on the global stage. If implementing retail CBDCs risks completely destroying a nation's own domestic banking sector, why are global superpowers rushing to build them? The answer is simple: national survival. Welcome to the geopolitical digital arms race, a battle fought not with missiles, but with programmable ledgers. To understand this war, we must first look at the reigning champion of the global economy. The US dollar has reigned supreme as the world's undisputed reserve currency since the Bretton Woods Agreement. But the true source of American financial hegemony isn't just the dollar itself, it is the global plumbing that moves it. It is called the SWIFT system, the massive messaging network that facilitates almost all international cross-border payments. Because it relies heavily on US correspondent banks, the US government effectively controls this vital global choke point. This allows them to use SWIFT as a devastating financial weapon. When a nation steps out of line or disobeys, the US simply pulls the plug, completely cutting them off from the SWIFT network. Overnight, that country is completely isolated from global trade. It is an economic death sentence. Watching this absolute display of power, rival superpowers, and BRICS nations realized a terrifying truth. They desperately needed a bypass, and programmable central bank digital currencies offer exactly that. A direct, sovereign way to trade instantly across borders, completely evading the dollar and totally bypassing the SWIFT network. This is no longer just about controlling citizens. It is a desperate, existential race to establish the new global financial order of the 21st century. To see this bypass in action, we must look at the undisputed frontrunner in the central bank digital currency race, China. While the Western world is still debating privacy implications, the People's Bank of China has already successfully rolled out the e-CNY. Domestically, the digital yuan is a marvel of surveillance, giving the government real-time visibility into the spending habits of over 1 billion citizens. But domestic control is merely phase 1. The true geopolitical weaponization of the e-CNY happens beyond its own borders. Enter the mBridge project. This is a collaborative, multi-CBDC platform built in partnership with the central banks of the UAE, Thailand, and Hong Kong. Imagine a massive, high-speed digital highway explicitly designed to connect these sovereign nations' central banks directly to one another. In the traditional SWIFT system, if a merchant in Thailand wants to buy a shipment of goods from a factory in China, the money usually has to be converted into US dollars and routed slowly through a correspondent bank all the way in New York. This old process takes days, incurs high fees, and most importantly, subjects the entire transaction to American oversight and potential sanctions. But on the new mBridge network, that exact same cross-border transaction happens completely differently. The Thai merchant converts their local currency directly into a programmable digital token on the shared ledger. That token zooms across the mBridge highway and lands directly in the Chinese factory's wallet, instantly settling in e-CNY. No dollars were used, no American correspondent banks were involved, and the entire transaction settled in seconds, not days. To the United States government and the Federal Reserve, this transaction is a complete ghost. They cannot see it, and they cannot stop it. By building this parallel financial infrastructure, China is engineering a master key to unlock global trade from the grip of the US dollar. But China is not acting alone in this endeavor. This financial master key is currently being duplicated and handed out to the entire BRICS coalition. Nations like Brazil, Russia, India, and South Africa are eagerly aligning to build an impenetrable fortress against Western financial sanctions. Imagine if the expanded BRICS bloc completely abandons the dollar, adopting a unified, programmable digital ledger for all their immense cross-border trade. And remember, this new multinational ledger would be intrinsically linked to the digital IDs of their respective corporations and eventually their citizens. If this parallel ecosystem reaches critical mass, the consequences for the traditional Western financial system would be absolutely catastrophic. The artificial demand that has propped up the US dollar for the last half-century would instantly and violently evaporate. For decades, America has been able to run massive, unprecedented government deficits simply because the rest of the world was forced to hold dollars. But if global trade no longer requires the dollar, trillions of those greenbacks will come flooding back to American shores simultaneously. This sudden influx would trigger a devastating wave of hyperinflation, completely eroding the purchasing power of the average American citizen. It is a nightmare scenario for Washington. The ultimate financial weapon, SWIFT, would be rendered completely obsolete, turning into a useless relic. And this terrifying reality is the true, unspoken reason behind the sudden, panicked rush for digital currencies in the West. The Federal Reserve and the European Central Bank are currently scrambling to develop their own programmable digital networks. They are not exploring a digital dollar or a digital euro out of some benevolent desire for technological innovation or consumer convenience. They are doing it out of sheer, unadulterated geopolitical terror. If they don't adapt, they lose the world. The macro war for global supremacy is raging, but to win it, these central banks will demand complete control over you at the micro level. Welcome back to the micro level. To maintain their grip on power in this new era, central banks aren't just going to track your money. They are going to fundamentally alter your human behavior using a psychological concept known as nudging. Nudging doesn't rely on brute force. It is the subtle, algorithmic manipulation of your daily choices, completely disguised as social responsibility. Look at the live experiments currently being discussed for the digital euro framework by European policymakers. They have explicitly debated implementing strict holding limits on every individual's digital wallet, meaning you would legally not be allowed to hold more than a few thousand digital euros at any given time. The official excuse is to prevent bank runs. But the reality is that it effectively outlaws long-term personal savings. But programmable nudging goes much deeper than basic holding limits. Remember that all-seeing digital ID database. Governments are currently pushing for individual carbon footprint tracking. Imagine you drive your car to work every day. One morning, your digital ID flags that you have reached your algorithmic monthly carbon allowance. You try to buy gas, but your programmable CBDC simply declines the transaction. The money is there, but the permission is not. The same algorithmic limits can easily be applied to your diet. Bought too much red meat this week. Your digital wallet locks out at the butcher. You are smoothly and silently steered into compliance. You aren't thrown in jail. You are simply nudged into submission. To the technocrats designing this overarching system, you are no longer considered a sovereign, independent economic actor. You are merely a programmable variable in their macroeconomic algorithm. And unfortunately, that algorithm is about to get much more aggressive. Let's talk about economic recessions. Historically, when an economy slows down and enters a severe contraction, central banks employ their primary weapon, lowering interest rates to make borrowing cheaper and encourage immediate spending. But in a severe crisis, when interest rates hit zero, central banks run out of traditional ammunition. They hit what is called the zero bound. For years, economists have wanted to implement deeply negative interest rates to force citizens to spend rather than hoard their savings. However, in the legacy banking system, if a bank attempts to charge you a negative rate for holding your money, you simply withdraw your physical cash and stuff it under your mattress, completely immune to their macroeconomic manipulation. Programmable CBDCs eliminate this escape route entirely. When physical cash is eradicated, there is nowhere to hide. With a direct, inescapable line to your digital wallet, the central bank can deploy negative interest rates with the push of a button. Imagine helplessly watching your life savings literally bleed away, continuously losing a percentage of its value every single day you refuse to spend it. You are mathematically forced to go out and consume, precisely when the central algorithm demands it. But the nudging doesn't stop there. Consider government stimulus checks or universal basic income, heavily relied upon to pacify the public during times of crisis. Instead of a physical check you can save for a rainy day, it arrives directly in your wallet as a highly programmable token. It is programmed with a strict, unalterable expiration date, exactly like the terrifying notification we discussed at the beginning of this video. The mandate is clear. Spend it within 30 days to stimulate the economy, or the money simply deletes itself from existence. In this dystopian architecture, money ceases to be a reliable, long-term store of value. It becomes nothing more than a temporary voucher for compliance. Now, let's examine the ultimate Trojan horse used to sell this system to the masses. Universal Basic Income, or UBI. During the next major economic crisis, or widespread job loss due to artificial intelligence, governments will offer a lifeline. They will promise guaranteed monthly deposits, sent instantly and directly to your sovereign digital wallet. No bureaucracy, no waiting. For a population struggling with severe inflation and unprecedented unemployment, this sounds like a utopian dream come true. But there is always a catch. This frictionless flow of free capital is the digital bait for the social credit system. To qualify for these universal basic income deposits, your connected digital ID must continually maintain a high compliance score. We already see the beta test of this architecture in China's social credit system, which actively ranks citizens' behavior. Crossing the street illegally, criticizing policies online, or associating with low-scoring individuals automatically lowers your digital social score. And when your score drops below the acceptable algorithmic threshold, the programmable ledger reacts instantly and ruthlessly. You aren't formally detained. Instead, your ability to purchase train tickets, board flights, or buy certain goods is simply revoked. Western nations claim they would never implement such authoritarian measures, yet they are quietly developing personal ESG scores. Environmental, social, and governance metrics are already being aggressively applied to major corporations to dictate their creditworthiness. It is only a matter of time before these exact same compliance metrics are forced upon individual retail citizens. Did you attend an unsanctioned protest? Did you share unverified information? The algorithmic ledger takes permanent note of everything. In this programmable ecosystem, your financial survival becomes entirely dependent on absolute, unquestioning obedience to the ruling ideology. If you still think this overarching control matrix sounds like a paranoid conspiracy theory, let's examine the real-world case studies unfolding right now across the globe. Look at Nigeria. They were one of the first major nations to fully launch a retail CBDC, known as the eNaira. However, the public heavily distrusted the system, and initial adoption was incredibly low. Did the government reconsider? No. They forcefully restricted the supply of physical cash, imposing severe, draconian limits on daily ATM withdrawals, effectively attempting to starve their own population into digital submission and forced CBDC adoption. Or consider India, a global pioneer in engineering this massive digital transition. They first established Aadhaar, the world's largest biometric ID system, successfully scanning over 1 billion citizens. Then, in a sudden shock move known as demonetization, they invalidated 86% of the country's circulating cash overnight. Citizens were forced to rush to banks in absolute panic, instantly funneling the entire informal economy into traceable digital channels. This perfectly laid the demographic and technological groundwork for their ultimate programmable currency, the e-rupee. But perhaps the most chilling, undeniable proof comes from Brazil's upcoming CBDC, known as DREX. When the central bank published the pilot source code, independent software developers found built-in functions that explicitly allow the authority to freeze accounts and arbitrarily decrease balances at any time, directly overriding the user. These control mechanisms are not theoretical. They are literally hard-coded into the software being deployed across the world today. In Western democracies, rolling out an overt authoritarian control matrix would face massive public backlash and political resistance. So, governments and central banks have devised a much more insidious strategy: public-private partnerships. They are actively partnering with the massive technology and payment corporations you already interact with every single day. They will present you with the ultimate illusion of choice. You can freely pick your favorite, colorful corporate wallet. But underneath the sleek user interfaces, they all plug directly into the exact same centralized CBDC ledger. By outsourcing the financial infrastructure to big tech, governments can effectively outsource the tyranny. If a private corporation decides you violated their constantly changing terms of service, by expressing an unpopular opinion or sharing unapproved content, they simply deplatform you. But in a unified ecosystem, losing your tech account means instantly losing your ability to transact and survive. The government keeps its hands completely clean, claiming it was just a private company, independently enforcing its own rules. This corporate state monopoly will be heavily marketed to you as the ultimate, frictionless, integrated smart life. Your phone, your car, your house, and your money, all seamlessly connected by one central biometric identity. Until the algorithm flags you, suddenly, your smart car refuses to start, and your digital door locks you inside. It is the perfect, terrifying convergence of corporate surveillance capitalism and state-sponsored authoritarianism. You aren't just losing your financial privacy, you are literally handing over the remote control to your entire existence. Of course, the central planners and technocrats building this matrix will heavily dispute this dystopian narrative. Their primary defense is security. They argue that a fully traceable, cashless ledger will finally eradicate money laundering and terrorism. They paint a picture of a world where criminal syndicates are instantly frozen out of the financial system, unable to hide their illicit wealth. But the reality is that to catch a few bad actors, they must treat every single innocent citizen as a constant suspect under total surveillance. Their second major argument is financial inclusion, the noble goal of bringing the unbanked populations of the world into the modern economy. They market CBDCs as a free, accessible digital tool that requires nothing more than a cheap smartphone to participate in global trade. However, what they conveniently omit is that this inclusion is entirely conditional. True financial inclusion does not come with an integrated kill switch. If access to the economy is a privilege granted by an algorithmic compliance score, then it is not inclusion. It is just a digitized form of serfdom. Finally, they argue for ultimate economic stability. With a direct central bank ledger, they claim we will never see another devastating bank run. They promise a perfectly secure, fortified system, mathematically immune to the chaotic crashes of the traditional fractional reserve market. But this is the ultimate trap. Your money might be safe from external hackers, but who protects your wealth from the central authority itself? When a single, consolidated entity holds the absolute power to print, freeze, and deduct your assets, the concept of private property is officially dead. The elite architects of programmable money always present their innovations wearing a soft, benevolent velvet glove. They promise safety, convenience, and inclusion. But once physical cash is gone, and the system is fully locked in, the velvet glove comes off. What remains is an iron fist of absolute, unchallengeable financial control. There is no negotiating with a centralized algorithm. Ultimately, the intersection of a mandatory digital ID and programmable currency represents the ultimate Faustian bargain of the modern era. They will desperately sell it to the public, disguised as the absolute peak of technological convenience and societal safety. They will promise you instant, frictionless universal basic income deposits during the very next global pandemic or economic crisis. They will tempt you with the complete elimination of annoying retail bank fees and instantaneous peer-to-peer transfers. They will advertise seamless, cheap cross-border transactions for businesses, eliminating the old banking friction entirely. But the hidden price for this unprecedented convenience is the absolute, total surrender of your financial privacy. Under this architecture, every single transaction you make is permanently and immutably logged on a centralized government ledger. Every single morning cup of coffee you purchase is tracked, analyzed, and permanently tied to your identity. Every political donation you make to a candidate or cause is instantly visible to the ruling bureaucratic class. Every single book you buy or independent article you subscribe to is permanently attached to your biometric fingerprint. There is no longer any separation between your financial actions, your personal beliefs, and your biological data. As we have consistently analyzed here on Unfiltered Finance, human history provides a very clear, unbroken, and bloody lesson. Whenever centralized authorities are granted absolute, unchecked surveillance power over their populations, they inevitably, and without exception, use that power to crush dissent and enforce total compliance. The digital cage is nearly complete, and the door is slowly swinging shut on the era of financial freedom. So, The ultimate question remains: is there any escape from this impending digital panopticon? Yes, but the window of opportunity is rapidly closing. The absolute best solution lies in aggressive decentralization and hard assets. While central banks rapidly consolidate power, independent individuals must secure assets that absolutely cannot be programmed, frozen, or inflated away. This means true self-custody of decentralized cryptocurrencies like Bitcoin, which operate completely outside the central bank's ledger. It also means returning to tangible, physical wealth, precious metals like gold and silver, real estate, and hard commodities. Furthermore, we must actively cultivate parallel local economies, supporting merchants who still accept physical cash or decentralized peer-to-peer payments. The future of money is being rewritten right now, but it is not being decided in open, democratic referendums. It is being engineered quietly, behind closed doors, in central bank meetings, and exclusive global economic forums. The transition to this programmable cage will not happen overnight in a single, dramatic shock event. Instead, it will be a slow, seductive crawl. It will be constantly marketed to you as the ultimate modern convenience. But awareness is the absolute best defense against algorithmic tyranny. If you understand the matrix, you can choose not to plug in. As always, stay incredibly rational, aggressively protect your sovereign wealth, and never stop questioning the official narrative. Thank you for watching Unfiltered Finance. If you value this deep, completely independent analysis, make sure to subscribe. Click the bell icon to join our community of rational thinkers who refuse to be nudged by the algorithm. Check out our previous deep dive on the screen right now. Until next time, stay completely unfiltered.